Hey there and welcome back to my channel, Fibonacci-Traders YouTube channel. In this special episode, Stock A Day, we're going to dive into the world of tech and finance to explore the latest developments and AMD. Can this chip maker continue to grow and thrive in a market dominated by Nvidia? So let's take a closer look at the numbers and find out. My name is Tamir Fibonacci-Traders and I will guide you through my analysis. So like, subscribe, and let's talk AMD. Many investors were hoping that AMD would catch up to Nvidia, capturing the market share that Nvidia is now dominating. It's becoming increasingly apparent that AMD is not going to approach Nvidia in terms of market share in the accelerated computer data center space, but that's okay. AMD can still generate strong shareholders returns by taking a much smaller market share in that category. In this video, I will evaluate the latest development at AMD, what's going on with AMD, and how the company is capitalizing on the increasing demand for artificial intelligence without battling Nvidia for the market share. So let's take a look. Lisa Su, who is the company's CEO and president, said that the latest quarter they delivered strong top and bottom line growth in the third quarter. Revenue came in above expectations, driven by record sale of their APYC products, which is CPUs for data centers. Remember, Nvidia dominates in the GPUs for the data center. Then they had robust demand for their Ryzen processor for personal computers. I'll talk a little bit more about this later in this video. Let's stick to the data center segment, where AMD saw revenue increase by 122% to a record of $3.5 billion. We believe we gained server CPU market share in the quarter as enterprise wins accelerated. So, as you can see, AMD demonstrating phenomenal growth in the data center segment, just like Nvidia. But Nvidia is much faster revenue growth at much higher profit margins and stronger market share for its product, which is primarily the GPU and the Blackwell technology. The Hopper technology, which encompasses more than just the GPU or more than just one component of the data center, by providing the technology that enhances data center, that optimizes the data center. So AMD still making great inroads in this category. The CEO says that EPYC has become the CPU of choice for modern data center, and our multi-generation product portfolio delivers leadership performance and significant TCO, which is total cost optimization, advantages across virtually every enterprise and cloud workload. And so AMD is gaining market share. The CPU that goes into this newly developed data center technology, and of course that's coming at the expense primarily of Intel, who is losing market share in this category. Intel dominated the CPU market shares of previous generation technology, where most of the data centers were primarily based on CPUs, where the CPU was the primary component. Now, with the latest generation technology, these data centers are optimized for accelerated computing, and they're based on GPUs. GPU is the primary component of this next generation data center. This is where Nvidia dominates, but Meta Platforms alone has deployed more than 1.5 million of AMD's EPYC CPUs across the global data center fleet to power their social media platform. Meta Platforms, in its recent quarterly update, said that in 2024 they're going to spend close to $40 billion on capital expenditures, most of that going to data centers, And they also said that in 2025, they're going to spend significantly more in that same category. So that's going to be good news for AMD and AMD stocks investors, because Meta is already utilizing so many of AMD's CPUs. And if they're going to spend more than 40 billion US dollars, I'm estimating closer to 50 billions in 2025, a good chunk of that money will go to AMD for its epic CPUs. Another sign that AMD is gaining traction is that Dell, HP, and Lenovo, and others have expanded the number of 4th gen epic platforms they offered by 50% in the last year. And if you're in business, you'll know that having distributors sell your product is a great advantage, because they help get your product out there. They help inform customers about the capabilities of your product and get your product from your shelf, your production facility, into the hands of customers. And these facilitators are a great help. They generate sales, they generate conversations, they introduce your product to customers, they provide information, they answer questions. And it's generally helpful to have distributors have your products, and the more of your products the distributors are willing to carry and sell, the better is for you, because that signals that they are confident that they can sell your product. They wouldn't have carried your product if they weren't confident they can sell your product. They don't want to waste their time trying to sell product that they don't believe matches the end customer needs. So with these distributors carrying more of AMD's products, it sends signal that they believe the end market user will benefit and will want these epic platforms. The CEO goes on to say that we are very, very well positioned for continued growth in share gains based on the strength of their epic portfolio and the momentum they've built in cloud and enterprise customers. But also, their data center GPU revenue has ramped up considerably as they launched their GPU to compete in the space they called the MI300X. They say adoption expanded OME and AI customers, especially Microsoft and Meta, expanded their use of this MI300X accelerator to power their internal workload in the quarter. And this is significant because Microsoft and Meta are large enough companies to have access to Nvidia's products. They can buy all of Nvidia's products, so they can have 100% of the data centers based on Nvidia technology. But they chose to have some AMD technology, and I've been talking about this for several quarters now, that these customers, especially those large customers like Microsoft and Meta, they're not going to want to be 100% reliant on Nvidia. Even if Nvidia's technology for the AI optimized data centers is better, even if we can all acknowledge it is better, they are the best, this company will still want to have AMD in there. They will still want to diversify into some of AMD's products, utilize some of AMD's products, get familiar with utilizing AMD's products, incorporating them into the system, just in case. And it gives negotiation advantages to Microsoft and Meta when they go to Nvidia to talk about buying the next several $1 billion worth of Nvidia's products. If Nvidia pushes too hard on pricing, on terms, on anything that these companies may not like, they can always threaten Nvidia and say, well, if you push us too much, we'll give AMD incrementally more share in our data centers. And so that threat of going to a competitor which will keep Nvidia not so powerful in the negotiation. Of course, Nvidia still have a very strong negotiation power because of how excellent the technology is, and the demand of the technology is through the roof. It's sold out, so they still can retain strong negotiating power. So why would Microsoft and Meta go with AMD? Of course, it's also because Nvidia's products are sold out and they might not be able to buy as much that they need, but still it demonstrates a strategic importance of having not reliance on one company for such a critical component. This has become strategically important for these large tech hyperscales like Microsoft and Meta. So it's interesting to see these latest developments for AMD. It's good to see them gaining traction here. Of course, they're not anywhere near Nvidia. They just operate in similar market, and so investors may have been a little bit too optimistic about the prospects of AMD, but they don't. AMD does not need to catch up to Nvidia or approach Nvidia to benefit from this market to generate shareholder gains. Once again, thank you very much for watching this video. I do hope you find it helpful, educational. If so, like, subscribe, check the links in the description below for more educational resources. Until the next video, stay safe.